heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde, live from San Francisco. Ed Ludlow, he's on location in Palo Alto, and this is Bloomberg Technology. Coming up, we go live to Palantir headquarters. That's where Ed is sitting down with the CEO, Alex Karp, to dive into, guess what? AI. Their full conversation later this hour. Plus, we'll push ahead to the earnings out after the bell. Broadcom is the latest company to test if this AI rally is a reality. And the EU's Digital Markets Act, it takes hold today, hitting big tech firms with a list of do's and don'ts. We'll break down the epic battles already raging for Apple and so much more throughout this hour. But first, let's check in on this market rally that we are seeing, and guess what drives it? Of course, AI, of course, chip makers. I look at what's happening, of course, as we see, well, still the moon music trying to decipher the direction of travel for the Federal Reserve. Are we seeing rates being cut at the end of the year? That seems to be where, of course, Jay Powell has been pushing us. And, of course, the ECB also hinting at rate cuts to come. The Nasdaq is currently powering on higher. Big tech gets the lift. We're up 1.4%. I'm looking at the euro actually higher versus the US dollar. The dollar moving as we anticipate some rate cuts, some dovish tones seemingly being interpreted by the market from Jay Powell, even as we also see Christine Lagarde hint to future rate cuts. We're currently up by 0.3%. The dollar is weaker against most FX pairs today. In fact, every G10 pair. And I look at what's happening in terms of the Japanese rally, really, versus the US dollar. We're seeing the yen up. And why? That's as we have signals that finally, the BOJ might move to be increasing rates. We're just up 0.8% versus US dollar, the US dollar down versus Japanese yen. Let's move on and have a look at what's happening in the world of, well, we look at it as sometimes a currency, sometimes a commodity, but as a risk asset, a choice on this particular show. Bitcoin up 1.4%. We're still trading around that $67,000 level. We haven't hit that record high that we managed to eclipse the other day, but still pushing to the upside. And let's dive into some of the individual names on the day, because we are excited about what Broadcom can prove. Can it get that 30% increase in revenue? Can we see AI really bearing fruit? We're up 3.4% on the overall benchmark that measures these chip makers. And this is a record high for the stocks. The Philadelphia Semiconductor Index, we're up 3.4. Palantir is where we go towards the second half of the show. We're going to be speaking with Alex Karp. We're up 3% as they have their AI day. And I look at what's happening with Apple, though. Cannot really catch a break. We're still lower. And that's as we try to decipher, really digest what's happening with the EU and how it's going to impact some of these big gatekeepers, as they're known. Let's dive into it. The EU's Digital Markets Act, it is coming into force today, hitting big tech firms with a broad list of do's and don'ts. And, well, really, they're going to face some threats of significant fines if they don't live up to the regulation. The aim, of course, to create a more competitive online field, imposing changes on these 6 so-called gatekeepers. Apple is one of them, but so is Amazon, so is Google, owner, Alphabet, so is TikTok, parent, ByteDance, Meta, Microsoft. Today, Apple already faces questions from the EU. The regulators over there are wanting to know about the accusations that it's barring Epic Games from opening its own app store for iPhone customers in Europe. But that is what these new rules are meant to be allowing. Bloomberg's Mark Gurman has more, and the Epic battle still rages on. Mark, just give us the inside track of why we're seeing Apple not allowing this third-party app store to come to light.
Caroline, Apple has a lot on its plate right now. It's looking for its next big thing. Today, like you said, the Digital Markets Act is coming into place. There is a lawsuit coming from the United States Department of Justice before the end of the month. So they're already dealing with a lot. This latest bit, completely unnecessary. Reading between the lines, essentially, Apple's App Store chief, Phil Schiller, and other people at Apple, perhaps, were upset about Tim Sweeney's tweets in response to the DMA rollout. That's Apple's way of complying with the new EU regulations. Sweeney tweeted that Apple's response and their new policies are, quote, hot garbage. He called it malicious compliance. He had a few other choice words, or as Phil Schiller called it in an email to him, colorful language. And so Apple decided they're going to yank Epic Games' new developer account in the European Union, in Sweden, that would allow Epic Games to roll out its own third-party app marketplace for the iPhone in the 27 countries that make up the EU. Apple pulls that developer account. Now the EU is asking more questions on the launch date for these new rules. Not great, And this has the potential for the EU to continue to fine Apple. Apple, I think, in the mind of the EU, probably doesn't have a great argument for why they did this. Pulling their account because they didn't like their response on Twitter about this, it's not a great look for Apple, I would say. And it's a little childish on one hand. On the other hand, there's the perspective that Apple believes that Epic Games is going to break the rules again and they need to protect their users. So certainly not a great development for Apple.
And we've been hearing, of course, Spotify also taking issue with some of Apple's ways of working around the DMA and feeling that they're still going to be charged an untoward amount of money ultimately if you do get more than 1 million downloads on your apps. As you say, Apple faces so many issues right now. And the key piece of reporting, of course, that you brought us last week was this almost $10 billion effort of a car over years of expenses that then they've retracted on. They're no longer going to be building the so-called Apple car, and they're putting the money into generative AI. You've got a real deep dive on what really went wrong here. Just take us through your big take today, Mark.
Yeah, I actually think that's why the stock has been down lately. Initially, you saw the stock jump up when Apple pulled out of the car a week or so ago. But now I think investors are realizing what's coming next. Investors always want to buy into what the future of the company is. And that future is not so clear. And it's less clear now after pulling out of the car project. They had gigantic ambitions to build essentially what amounted to a private jet or living room on wheels. You had club-style seating, recliners, you had footrests, gigantic TVs and state-of-the-art audio systems, the ability to watch TV and FaceTime and game from your car while it's driving itself. From what I'm told, some of the designs of the Apple car were absolutely beautiful. It looked like a Canoo EV with white wall tires, a white exterior, dark black tinted windows that could adjust their tint levels like a Boeing Dreamliner airplane, some state-of-the-art autonomy systems. Everything in there was state-of-the-art. It looked nothing like you'd have ever seen on the road before in mass quantities. But there were major problems, from indecision on what to do, what level of autonomy to go for from the very top of the company. There were issues, of course, about the technology and when autonomy or full autonomy would be ready. There were manufacturing concerns, competitive issues, and of course, the real nature of the competitive car business and the profitability of what a car would bring and the challenges in that business. But one thing I'll say, I spoke to someone involved in the project yesterday, and they really pushed back on that idea of there being profitability concerns, which there absolutely were. But this person disagreed with those concerns, saying, you know what business is harder than the automotive business? The consumer electronics business. And Apple's doing just fine there.
Well said. Mark Gurman. Such great reporting. We thank you for it. Let's switch gears a little bit now and go to where the optimism in the market has been. Chip makers, Broadcom, earnings, they're coming after the bell today. Investors are waiting with bated breath. They want to see if the continue is really going to be there for the AI frenzy across hardware, across chip stocks. Bloomberg's Carmen Reinicki is with us. We're pleased to welcome Carmen. We are anticipating big numbers, are we?
Yeah, so investors are really looking at these earnings as the next gut check for, as you said, the chip-making stocks, the sort of hardware, the picks and shovels, if you would call them that, of the AI rally. And so what Wall Street is expecting here is for Broadcom to report about $11.8 billion in revenue for the quarter, which is a 30% jump year over year. Most of that is from AI, and what they're also looking for is that the total chip sales, which in the last quarter was about 15% of total chip sales, will go to about 25% for the total year. So they'll be looking at an update on that. Is there progress? Are we moving from that 15% number towards that 25% number? The stock is looking really good up into the earnings. We're up about 3% today, 25% year to date, and 50% from its last earnings release. And this has been huge. Broadcom is a little bit of an unsung AI hero, I think, because it's the 10th biggest stock in the S&P 500 right now. It doesn't get the same shine as the star of the show, NVIDIA, but it is in a similar realm. One thing investors are also looking at here is that sort of unlike NVIDIA or AMD, Broadcom is a little bit less of an AI pure play. So though AI is the biggest thing that investors will be looking at. There are other pieces of the puzzle here. So on one hand, some people say that could be really beneficial. If AI is indeed a bubble, there might be some insulation for Broadcom investors. But on the flip side, it could kind of hold back some of the growth that some of the AI names are seeing. So there's a lot that investors will be looking at here. If the last release was any indication of what's coming on the call, and the future guidance from CEO Hock Tan is going to be really important. Last quarter, we actually saw shares dip a little bit and then go back up when the CEO said that AI is going to be a bright spot for them going forward.
Carmen Ranicki, we're pleased to say you're going to be all across this story when the numbers come out after the bell. We really appreciate you on the show. Thank you. Meanwhile, coming up, look, we're going to talk about the state of artificial intelligence, not just for chip stocks, but actually, well, how diversity is necessary when you are building these large language models, when you're thinking about policies for responsible AI. That's more next. Meanwhile, speaking of AI, let's get back to the chip makers for a second. NVIDIA really powering us up higher. Interestingly, we're seeing chip stocks at a record high, but NVIDIA notably has had some key executives, those board members, selling the stock of late. $180 million worth, in fact, has been unloaded by a couple of board executives, long-term board executives in the last few days. That, of course, follows on for some significant sales happening in February as well. This is Bloomberg Technology.
AI is going to create tremendous wealth and value for shareholders, for stakeholders, for employees of these companies, for the people and the businesses that utilize AI. And we can't leave behind women and minorities in this value creation moment.
Salesforce executive Clara Shih there on just how diverse workforces are key to building artificial intelligence models and creating the policies, in fact, for responsible AI. We want to continue that conversation. It's a hot topic, we know. Navrina Singh's with us, founder and CEO of Credo AI. It's a responsible AI governance company, which allows businesses to ensure that their AI is compliant, transparent, auditable. And my perspective would be that your business is just up and to the right, people desperate to get their governance in place. Is that really happening?
Caroline, good to see you. You know, right now, governance has a very interesting connotation in the world of AI. Many see it as actually a deterrent to innovation, but that's actually not the right way to think about it. We have seen that organizations that embed and start doing governance early on in the AI journey are the ones who are actually showing up as a winner. So I think this is a very interesting interplay between governance and innovation, and I think we are going to see that drastically change this year.
What's interesting is, I mean, the headlines keep coming. I think of my colleague, who's Jackie Davalos, writing that there's been sort of a whistleblower over at Microsoft at the moment coming forward saying, look, there are concerns within the co-pilot of image generation with DALL-E, and they feel that there's not enough governance and guardrails in place for safe image generation when it comes to these large language models. And we know what's happened with Gemini, where almost to correct one bias, they ended up bringing us completely ahistorical images. How could governance have perhaps fixed this ahead of time, before release?
Yeah, great question. So, you know, generative AI and AI by itself is a very complex technology. One of the things that I think most people don't understand is it's not just a technical problem. It's a socio-technical set of problems that are getting introduced in artificial intelligence. So what that really means is, how could Gemini's problems be solved, or what we are seeing with Microsoft? It actually needs oversight across your organization. It needs oversight across your systems, your AI models, as well as your data sets. But more importantly, it needs stakeholder involvement. And that stakeholder involvement really comes from everyone in the organization, your risk and compliance and data science teams, but also your users. Right? So what are we actually providing these AI applications for, and how these users are getting impacted is really critical. And I think that's what's really critical for organizations to understand is, before putting systems out in the market, not only thorough testing and evaluation, but making sure the right diverse set of eyes have been on those systems to make sure that they're actually meeting the end goal is really critical.
Can you just talk me through, as if I was a customer?
Yeah.
What do you come in and do? How do I put this governance in place?
Yeah, absolutely. So the key thing is, there are three core pillars of AI governance. First and foremost is alignment. Carolyn, as you can imagine, what does good look like for your organization really varies organization by organization. And that's why alignment on what are you going to measure, how often are you going to measure, how are you going to report against it, that alignment is really critical. So our software basically helps you with alignment as a service as step one. Now, once you've aligned, the second step is really critical, is what are you testing? And as I mentioned, given the socio-technical nature of artificial intelligence, you have to test everything from your technical AI systems to how your organization is set up to actually provide that oversight and accountability. And then the last thing is, how do you actually make the outcomes understandable by diverse stakeholders? Not everyone is an AI expert, right? So how do you actually create the risk dashboards, the transparency reports, the audit reports, so that all these different stakeholders can understand, one, what are the risks within your system, but more importantly, what mitigations are you going to put in place and the accountability structures you're going to put in place to make sure this AI works for all?
We've almost been here before. You look at the EU regulation coming in today, is a highlight that many regulators feel innovation was put before safety or indeed level playing fields competition. When you're saying innovation is being seen as the offset to guardrails, do you think more regulation is needed to ensure that companies are using Credo AI, are bringing in their guardrails at the same time?
I would say that more intentional regulation is needed. I think more guardrails and enforcement mechanisms are needed. So as an example, just think about 2024. 2 billion people across 50 countries are going to be in election, and they're going to be voting. And majority of that is going to be powered by artificial intelligence. So when you have
How is that majority going to be powered by artificial intelligence?
Because they're going to get access to information, they're going to get access to text, media, ads, which are all going to be built around artificial intelligence. And we've seen examples of deepfakes already showing up, right? So the key question that we should be asking ourselves is, one, not only what the bills and policies are in place, but how are we going to enforce it so that a normal voter, a citizen who's actually going and showing up to vote, actually has the right information before they make that very important decision for our democracy.
We've already had an executive order when it comes to AI. You advise the White House on AI and indeed, I'm sure, policy making. Is government doing enough? Are we seeing Congress move swiftly enough?
I would say this is the first time in the past couple of decades we've actually seen government action trying to keep pace with technology. But we are in a very different era of technology innovation where it is moving so fast. And so this is where adaptive policy making becomes really critical. And an executive order is a fantastic example. There were key goalposts that were put in place in executive order, including OMB guidance. How does federal government procure third-party commercial AI? What are the safety standards that we need to establish? NIST's role in the U.S. Safety Institute, we are a proud founding member. But I think there is more work that needs to happen. For example, Congress just passed the budget, and NIST funding was cut by 12%. So what does that signal? If AI safety and benchmarking is critical, I think we need to show investment dollars in those initiatives, and that's not happening.
I'm imagining you're a global company.
Yes.
What are other companies, other countries doing?
Yeah, you mentioned Europe. EU AI Act goes into effect this month. And that is a big step forward for a country that is putting European citizens' rights first through a very risk-based approach. The key question is going to be, how is that going to be enforced over the next 16 months, where each and every organization, multinational organization, will have to play by the EU rules. So EU AI Act is truly going to have that Brussels effect that we saw with GDPR, but at a magnitude that we can't even imagine. And this is a time that organizations need to start getting ready for it.
Who'd have thought it? EU getting in ahead of time. Navarina Singh, we thank you so much for lending us your expertise today, CEO and founder of Credo AI. Coming up, SK Hynix. It's investing more than $1 billion in South Korea this year to expand and improve the final steps in its chip manufacturing. We're going to discuss why that's also an AI story too. This is Bloomberg Technology. Time now for Talking Tech. SK Hynix ramping up its spending on advanced chip packaging in hopes of capturing more of the burgeoning demand for the crucial component in artificial intelligence development, high bandwidth memory. Now, the firm is investing more than $1 billion in South Korea this year to expand and improve the final steps of its chip manufacturing. Plus, China's foreign minister, Wang Yi, called the level of trade curbs that the US has imposed on the country bewildering. That's as President Biden's efforts to block Beijing from advanced tech undermine a steadying of ties between the world's two largest economies. Meanwhile, the US government is pressing its allies to further tighten those restrictions on China's access to semiconductor technology. The Biden administration's latest push, it aims to plug holes in export controls that it's levied over the past 2 years, basically to restrain China's progress in developing domestic chip capabilities. Let's just stick on, well, the tension with US and China right now, because today the House Energy and Commerce Committee plans to act on legislation introduced by a bipartisan group of House members that would give TikTok's Chinese parent, ByteDance, just 165 days to sell it. For more, let's bring in Bloomberg's Dan Flatley. And Dan, that, of course, seems to be where we're seeing the push going. Get rid of the Chinese ownership of TikTok.
Yeah, you know, we've sort of been here before. It's interesting. This is the latest push, and it does seem to have some momentum behind it in the sense that, you know, there's a markup today, as you mentioned, in the House Energy and Commerce Committee. There could be potentially some Senate action, although we don't have any indication yet as to, you know, how that chamber will act. But, you know, this still has to go to the House floor. It still has to go to the Senate, potentially. It still has to go to the president. So we're a long way from actually seeing this happen. And, you know, TikTok has been under some form of national security review since 2018. And Trump, when he was president, tried to ban it in 2020. That ended up in the courts. So, you know, there's still a lot of tape to play out on this, but certainly some action planned today in the House.
Meanwhile, TikTok's response is, well, this is curbing free speech, a right to access to such a platform. Do you think that their argument carries weight?
Yeah, I think the reason that they're making that argument is because the First Amendment challenges are where they're on their strongest legal footing. You know, there's broad exceptions in a lot of U.S. national security laws for free speech. And so obviously that's where they intend to mount their challenge. You know, the sponsors of this bill, or at least one of them, Mike Gallagher, the chairman of the China committee here in D.C., is saying this is not a ban. This is essentially just trying to excise the Chinese ownership of this company. But, you know, that's in some ways not really for him to say. I mean, the courts will have their say on this at some point. Certainly he has his argument to make, and he's making it right now.
Dan Flatley, brilliant that you bring us up to speed with the legal ramifications. We thank you so much. Coming up, oh, we got to get to Palantir. Shares rising ahead of its all-important AI conference. We are going live to that event next to hear from the CEO, Alex Karp. From San Francisco and soon from Palo Alto, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde, right here in San Francisco. Now, it's 2023. Venture deal making declined. You know that. Across the board, for a second consecutive year, it's pretty ugly out there. Female founders, of course, they were impacted. But interestingly, they still managed to secure a record share of total deal value. That's according to the latest report in female founders in the VC ecosystem. It's all put together by PitchBook, and they put the data out today. Let's dig in with Anne-Marie Donegan, she's the analyst behind this research. Ooh, 28%. Doesn't look too bad, but can you put that into actual numbers? What sort of money is being raised by female founders?
Yeah, that's right. We're looking at a population of companies that has grown significantly over the past decade, raising tens of billions of dollars collectively. But then when you contextualize that, look at the amount of funding for companies that have no women representation on the founding teams, you're seeing companies pull in hundreds of billions of dollars. So quite a bit of a difference there, but definitely seeing some resilience among those companies in 2023 as broader activity has come down. Those companies are hanging on to their share of the total.
Okay, so is there a number for that total?
Tens of billions in the network of 30 billion about.
Okay, so if we look at 30 billion, why is that number heading up? Is that because there's more, just sheer scale of numbers of individual founders and individual companies coming for money? Or is it that the companies are starting to get of such a size that they're able to raise a decent clip?
Yeah, so we're seeing fewer companies engaging because the conditions are so difficult. So it's not a matter of the individual company numbers, it's more about the quality of those companies. So standards are getting higher for investors. They're getting more discerning with the amount of capital that they deploy to certain companies. So we're seeing the larger, best positioned companies hang on to that share. And when we look at female-founded companies, we see the proportion rise, and that's indicating that those companies are already at such a high standard that they're able to pull in additional capital and have some resiliency on the downside there.
So I think of some of the unicorns that were inked very early in 2023. There was sort of Maven, for example, a healthcare company run by Kate Ryder, able to raise money. Is there a sector that does well? I mean, I think of healthcare being a key area of focus for female founders? Or is this like more broad? Are we seeing the AI revolution being driven by women too?
Of course, it would not be a conversation about VC these days without mentioning AI. A lot of women really at the forefront of that. Companies like Anthropic, Scale AI, Credo, who we heard from earlier, really involved in this movement for sure. We're seeing that's pretty much one of the only verticals in 2023 that managed to pull in more capital than the year prior. So most other sectors seeing a decline across the broader VC space, but seeing some resiliency in healthcare, like you mentioned, climate tech as well, some areas that have been able to hang on to that value.
And it's interesting that you bring up Anthropic. We had Daniela on the show just earlier, but she's a co-founder. Are you looking at numbers that they are within the founding team diverse? There is at least one female founder, or is it more that they have to solely be led by women?
We look at both. The main methodology, we're looking at companies that have at least one female founder. So they may have a male co-founder, they may not. We also look at a smaller section of that total, which is just those companies with only women founders. That population, much smaller, only pulling in about a single-digit percentage of the total dollars.
What about the people that they're sat on the other side of the table to? Who are they going to for money? Are they more diverse VCs that are tending to write the checks?
Right. Well, that's a big part of the equation. You know, when you have founders that are looking to enter the space and break in, you need an investor that really can see the value of that founder and the company itself. So a big part of the equation there. When we look at the breakdown of gender of check writers at VC firms, so these are the people that ultimately determine whether or not a company gets funded. We're looking at another area that's heavily male-dominated. About 17% of check writers are women in the U.S. So in most cases, you're going to have a situation where, as a female founder, you're pitching to mostly men investors. So there are definitely some implications there as well.
It's a great report. Thanks for bringing it to us. Anne-Marie Donegan, she's, of course, of PitchBook, a research analyst there. Next up, we talk that AI flavor with Palantir. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in San Francisco, and, well, we have got to get down to Palo Alto. There's a big conversation being had around AI, and Ed Ludlow, you're sat there. How has it been going?
Well, we're at AIPCon, where the focus for Palantir is its commercial customers. But frankly, the near-term catalyst in this stock has been the contract win around Titan. I did sit down for an extended conversation with Alex Karp, the Palantir CEO, where quite clearly he is showing progress on going to a wider commercial customer base, but also frustration about how business is done in this country. Have a listen.
I'm very exquisitely happy about how well we're doing, both in the government and commercially. But the most important change in the U.S. government has nothing to do with Palantir. When we started building this company, the idea that software would power intelligence, warfighting, general health issues was viewed as something esoteric, scandalous, obviously questionable. The idea that America's premier advantage would be software was viewed as also esoteric, academic, self-serving. And every institution in America, and especially the Pentagon, have begun to come to terms with the idea, the reality that hardware-driven systems purely are inferior to software-driven hardware systems. And beyond that, our adversaries are as good or better at building hardware systems and have a deficit in building software.
But what is different about Titan as compared to, say, Maven is that you are entering new relationships with other hardware providers, right? Like Anduril is one example. Explain how that is working in this case.
Look, actually, I see this as a commonality. America needs to establish dominance on the battlefield. Maven what's publicly known about Maven is one of these projects that actually took what America's the best at in the world, software, and put it in the hands of our warfighter. By the way, at enormous cost. You're sitting in Palo Alto. I had people protesting here, hundreds, putting up chains in front of our office, calling us Nazis because we were dedicated to serving the American people, because we had the sense God gave a goat, and we realized that if you're going to do really important things in this country, you should defend this country with every asset we have. And what really happened on the Silicon Valley side is that you got, because of that success, because of the power of it, and quite frankly, because of our success, people realized this is a place where you should invest and make America even stronger. And what happened is you got a whole ecosystem of defense startups and an ecosystem of people inside the Pentagon who are ready to embrace that are doing things, by the way, that are very similar to what's happening in the commercial space. And what are those things? We're going to look at software not off PowerPoints. We're going to buy software from people who've actually sold software commercially. And what's unique about Titan is not the difference, it's the logical extension. And what is that logical extension? People who've built software products that have been used on the battlefield and used commercially. And you have to ask yourself a question. If your software is so good, why have you not sold it commercially and made yourself billions of dollars? So that simple insight, which you see in the battlefield in Ukraine, which you see in Israel, is something that is hard for institutions to internalize. The Pentagon, this step is one of the most historic steps ever, because what it basically says is, we're going to fight for real. We are going to put the best on the battlefield. And what is the best? The best is not just not one company. It's a team of people led by the most prominent software provider in defense in the world, Palantir.
There's something you said there that inside the Pentagon, people are ready for this. Bloomberg did some quite deep reporting on the use of Maven specifically in 2024 so far, and the complaint from operators in the context that it's used for targeting is that it's still not quite there. It's still. But I'm just offering you an opportunity to respond to that.
I'm not going to respond because I'd have to tell you all sorts of things. There is no one. By the way, that was a long and very important article. Everyone should read it. The way I read the article was, this is the most important thing, one of the most important things the Pentagon has done in decades.
Right.
I can tell you the way our adversaries see Maven and our friends is like, what the F? How did they actually produce this? And I tell you what the average citizen reads that article is like, thank God we're spending money on things that are more valuable than what we're investing in. And to go into more detail, you have to go to all sorts of classes. That program is one of the shining stars of what this country has done. And it serves as a template for, we're going on the offense, we are going to assert dominance, and we're going to negotiate after we're the best in the world.
Alex, I host a technology show, and I want to talk about the technology, its current capabilities and where it can go. Is that platform ready to move from assisting in targeting, which is intelligence basically, to giving more information? The article also looked at the idea that there is a hope from intelligence services and the US government that it can be one day in a position to recommend which weapon to use, to give more tactical advice.
Let me give you commercial examples, because I can't go into what it can do and what it can't do. I can tell you what we're doing commercially.
Please.
Right now, you're going to see a normal non-engineer sitting at their terminal, tasking satellites, exporting a logic inside the security model of the company to figure out which satellite should be over which part of their agricultural assets and what should happen based on weather conditions. Now, you can just imagine how you could do that with a weapon system. This is exactly what Palantir commercial, not Palantir highly classified environment. Palantir with somebody that has been hired 5 days ago, that can't write code, that's very smart, may not speak English, and has just entered the enterprise, is doing that workflow. That is happening right now. And that is why this revolution, which is highly confusing. It's highly confusing.
It is.
Yeah, it's confusing because a lot of the stuff is BS. Then there's the poetry side of it. I love poetry. If I could go read more poetry, I would. Enterprises don't need more poetry.
The BS, you mean what?
Well, it's like, I don't know, somebody delivers PowerPoint, we're going to give you, it's like, look, everybody has to try to sell something. If you don't have something to sell, you sell words right now. So you're selling something that doesn't work, can't work. You're explaining to your enterprise, you can't have the car you want, which is honestly Palantir, but you can have the car you don't want because this and this and this and this, and you have to buy it. And that's by the way, that is a plague on many societies, less so America. There is this problem in Europe that there's really no high-end software vendors. Luckily, our adversaries have this problem.
And you've spoken about your frustrations with Europe not being more adoptive.
Well, I spent half my life in Europe. I want the West to win. So I want, but it's a confusing revolution. If you're sitting there and you're sitting in a society that has led industrial revolutions for hundreds of years, and all of a sudden the industrial revolution is happening basically in one place, and that's right here. That's confusing. It's confusing because 3 vendors are saying they're going to offer the same thing. One thing is like, I'm going to explain to you why it doesn't work. You have to buy our BS thing. The other's like, oh, it does work, but it's only poetry. And then there's a third category, which judges by the fruits we provide, which is exactly what we're doing, which is like, great, we're not going to argue about this part of our product, that part of our product. I'm happy to explain it to somebody who's technical. We're going to show you what happens in 4 to 6 hours, as opposed to what happened in your whole enterprise over the last 2 years.
We will talk about the commercial business. We will talk about boot camps. But let me just...
We can talk about whatever you want.
But a final point, you talked about the confusion of the revolution, okay? Today probably will be the first time that a president says artificial intelligence in a State of the Union speech. So it's a very simple question. What is your summary of this administration's leadership, so to speak, of the US in the context of AI?
It's very helpful if you spend a lot of time abroad, because like if you look at this internally, like internally in America, there's a long list of criticisms that you could make of anyone. This country is the dominant country with no second country in the world. So whatever we're doing, it's working out pretty damn well. So it's like, yeah, could we be better? Could we have better regulation? Could we understand these things better? But again, we are dealing with a revolution. That's one of the really confusing things, again, for Americans. Is like, normally you have a revolution and multiple countries are participating. This is a revolution where the technology is being produced in America, mostly in Silicon Valley.
But you do have multiple customers, so just bear with me on this one. Take, for example, Israel, where you are doing some work with that country. The administration, as an example, is pushing for a ceasefire in that region, but you are working with Israel. How do you manage that? Because it sounds like your first priority is the United States.
How do we manage? Look, we very happily supply our products to our allies, including Israel. I don't like Israel. What's going on here is, does America provide Israel with more aid? I don't think there's any question of, does Israel have the right to buy the world's best technologies, assess them, and implement them? Israel, I think, has decided we have some of the world's best technologies. They've implemented many of them and publicly discussed some of them. And Palantir, I think the orthogonal, maybe more in question was, why do we say in public what everyone else believes in private? I.e., we should defend the West, we should not apologize for fighting terrorism, and we are going to provide our sharp tools to our allies.
Let's talk about the commercial business, okay? You told my colleague Lizette Chapman 1 month ago, almost to the day, quote, we don't know what to do with the onslaught of demand in the commercial context. Do you know 1 month on what to do now?
No. I mean, if you're going to see a boot camp here, series of things, we've had to, we haven't been able to meet demand. We've had to tell people we couldn't accommodate them. We have hundreds of people coming, not just people, but leaders of industry. And if you just look at it from the internal dynamics of how do you deal with the contracting? How do you deal with the implementation? It's true these things have gone from taking us 3 months to 4 hours, but it's also true.
Well, the idea is you cram 4 months worth of work into a day in these boot camps, right?
It is not even a day. It's hours. And so
why is that important to Palantir? Why did you go down that route?
Well, the most important reason it's important to Palantir is we can fight with people about PowerPoints and their ability to do stake dinners.
Why do you keep bringing up PowerPoints? Is the point you're making that your competitors go in with a deck and
Absolutely.
say, this is what we'll do, but they don't have a product?
Well, I'm not saying anything. What I'm really saying is, if you have a product...
Well, you did. You said PowerPoints many times.
Exactly. So what I'm telling to everyone there is, like, they may have a product. We're showing you our product.
Okay.
I can't comment about where they have a product. I can tell you they're very buttoned up and not showing any leg. We show our product. And so why is it important? You ask why it's important. And I'm telling you why it's important. Because A, people fight us or fight enterprises that are doing the most important work with slick PowerPoints and great steak dinners. We're bad at slick PowerPoints. We're even worse at steak dinners. We don't play golf. What we do is we play software. We will put, if you want to actually compete on your product. And what's very special, and yes, do I enjoy humiliating people who have better steak dinners and sharper knives and better golf swings? Yes, I do. You know what? I really like that we win in that way. It makes me very happy. And it makes our clients happy because, let me finish
Keep
this.
going, but we're getting close.
Great. Well, and why are our clients happy? Because American industry knows that this is a structural advantage and that needs the best products. And why is the boot camp overrun? Because the clients themselves are tired of these damn steak dinners and the golf. They want to see products that actually work, that actually live up to what people are saying. What are people saying? You will transform your enterprise. You'll make it cheaper to run your enterprise. That you'll make it safer to run the enterprise. You'll be able to track what you're doing, and you'll be able to uplift workers who formerly only could be engineers, and now they can be everywhere. And by the way, you can do all of this in America. You can manufacture like you were manufacturing in Japan and Taiwan in America. You can use workers that used to have to be engineers right here in this country. And why is it? It's also fun for Palantir because we are winning.
Alex, I've got to ask you before I lose you. The most common question that I get to ask you from the audience, I post on social media, you're coming on, is when will there be a direct-to-consumer or I don't even know what we would call it, but a publicly available version of AIP, and if that would ever happen.
Let me tell you.
Because they see you as a leader in the space, the Palantir, not necessarily you as an individual.
Whatever they see, I'm happy. But okay, look, Palantir, you are seeing the tip of the iceberg when you are buying our product now. We've been working on these things.
You can't buy it if you're a person off the street.
Great. You are seeing the tip of the iceberg of our product development, and we are going to show more and more and more of what we have. And I think people, and I would also like, a lot of those people asking the question, by the way, are not academic. They are investors in Palantir, and they have supported us when we were down on the ropes, and those are the people that we are fighting for.
Anyone else thinking about steak dinners right now? Palantir CEO, co-founder Alex Karp. What an interview. Ed Ludlow, great work. Meanwhile, look, we've got to pivot and think about AI and ultimately getting into the hands of customers right more. How are people using generative AI? Amazon Web Services has just launched a new Gen AI competency program for partners, aiming to basically help customers figure out which partner to use, what product to be actually using within their business, and have generative AI suit them, and not just something that they aspire to. For more about this program and what it means for its launch partners, including the likes of Accenture, Cohere, MongoDB, Hugging Face, NVIDIA, to name but a few, let's bring in Amazon Web Services Vice President of Worldwide Channels and Alliances, Ruba Borno. Ruba, I love this focus, basically, on the fact that you're saying this can't be an aspiration. People have got to be able to use it practically in their businesses. How are they using AWS and the offerings of large language models you have to change their businesses?
Caroline, first of all, thank you so much for having me today. I'm really excited to be coming to you live from Seattle, where we're hosting 200 of AWS's most strategic partners. And we've launched just this week the generative AI competency for our partners that you mentioned. I'm so excited that we have over 45 launch partners, and they're doing exactly what you talked about, which is demonstrating technical expertise in generative AI technologies. We're talking about technologies like Amazon Bedrock, Amazon SageMaker, and Jumpstart, and Amazon Q. And why is that important? Because these partners have demonstrated not only experience and knowledge of those technologies, but customer success with multiple production-ready use cases. So we're excited to showcase that to customers, because customers right now are thinking, I've heard about generative AI. I know it can transform my business, but who can I work with, and what are the right use cases I can use?
Give us some standouts where we're already seeing use cases. How are people using Claude 3, Anthropic's latest set of models, within their business to change things?
So the Anthropic Claude 3 announcement that we made this week is really exciting. Claude 3's Opus model is the most intelligent model on the market today, and it runs on AWS Trainium and Inferentia, giving it the best price performance. But why is this interesting? What it allows customers to do, customers like CrowdStrike, which is a leading cybersecurity customer, also an AWS partner, they use it to power their own generative AI capabilities. And they're able to then handle things like large prompts and provide scale and safety. That's something really critical to how AWS views generative AI. And I'll give you a couple of other examples. One of our competency launch partners, Mission Cloud, worked with a company called Magellan TV. And this company has a large library of documentaries that they make accessible to a global audience. And what they wanted to do was to enable that audience to achieve, to be able to watch those documentaries in every language, both have transcribed the translations and also foreign language dubbing. Now, that's a really tough problem because you've got to have address slang, you've got to address profanity, you've got to address inflections for the voice dubbing. It was cost prohibitive to do the old way. It cost about $20 per minute. With generative AI, they were able to reduce that down to less than $1 per minute. That allowed Magellan TV to now reach a global audience nearly instantly with that technology.
Ruba, I love that tangible example. What is also at the forefront of people's minds, we've only got a minute left, is safety. How do you ensure that the offerings you're providing through Bedrock aren't going to be making things up, but also more broadly have ethical implications?
It's a great question, and responsible AI is core to every service from AWS. We have been designing security integrated into the products from the beginning, and it is more important with generative AI than it has ever been before. We've heard customers and partners state concerns about generative AI. Customers have the ability to aggregate data and insights from different sources, and so that's why we designed security in from the get-go, to make sure there are guardrails so that individuals who should have access to the data, think financial data, and other proprietary information, have access to it. And those that shouldn't can still make use of the generative AI tools, but have those guardrails based on the data they're allowed to have access to. So providing policy and governance to ensure that enterprises are able to protect their information. I think this is critical for every enterprise to think through, and it's going to be the way that we're able to ensure that generative AI is adopted en masse.
Ruba, great to have time speaking with you on the day that you're announcing this. Of course, Ruba Borno of Amazon Web Services, we appreciate it. Meanwhile, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You want to go and listen back to that Alex Karp conversation. This is Bloomberg Technology.